Welcome back to Startup Street. QSR brand Burger Singh has secured an undisclosed amount in a pre-Series B funding round, elevating its valuation to $52 million. Now, this funding round was led by Turner Morrison with participation from Homage Ventures LLP, Office of Aditya Ghosh and existing investors. Now, to take us through the expansion plans of this made-in-India burger chain, joining me now is the founder of Burger Singh, Kabir Jeet Singh. Kabir, welcome to Startup Street. Like I said earlier, Burger Singh is now valued at $52 million. So take us through the current business growth numbers. What is the top line looking like? And what kind of sales have you seen this year? And most importantly, what are your top performing cities?
Sure. Thank you for having me. We look like we're going to end the year roughly at about 130, 140 odd crores in top line. The store level economics look fairly good. We've got 150 stores, out of which 111 are live. Each store does about a 20% EBITDA and roughly about anything between 14 and 17 lakhs per store in revenues per month. A lot of the stores are in tier 2, tier 3 cities, and I think that's where most of the growth for us is going to come over the next 2 or 3 years. What I mean by that is, say about 111 stores live. Tier 1 cities should be anything between 36 and 39 stores. 47 odd stores in tier 2 cities, and 25, 27 stores in tier 3 cities.
All right. With the fresh funds raised, you've got some aggressive expansion plans, and they're not just about scaling up. You also want to innovate and evolve in the QSR space. Kabir, elaborate on how you plan to do this. Also talk to us about the Burger Singh Express model and how it is maximizing ROI.
Okay. If you think of a burger brand, you're thinking of 3,000, 4,000 square feet of space. That's what the bigger American boys do, right? Capex ranges anything from about 2.5 crores to about 4 odd crores. What we wanted to do was we wanted to kind of associate the brand more with a smaller format, because then it becomes a lot nimbler and you can go into smaller cities. Because you would notice the larger burger brands are concentrated on the bigger 20 cities of India because of their capex requirement. Now, what the kiosk model does is it's 100 square feet, literally a box. It comes in like an IKEA box. You can install it, uninstall it. You can plug it into the wall and it's good to go. So it doesn't need any water connection. It doesn't need any drainage. It's a self-contained kind of a unit. What that does is in 100 square feet, your rental requirements go a lot lower.
Sure.
Your capex requirements go a lot lower, because in 100 square feet, you can build something like that in 25 lakhs. Now, in 25 lakhs, you can deploy these in airports, in metros, in hospitals, in universities. Pretty much like a vacuum cleaner, you can plug it into the wall.
All right.
We've started rollout with the Delhi Metro. We've got 6 stores live, 15 more in the pipeline. Each store does anything, say, between 10 and 12 lakhs worth of revenue from 100 square feet of space. Now, that makes it a really, really capital efficient model. Also, ROIs are great, because at 25 lakhs, you take 3 lakhs back in EBITDA, you've got a payback period of less than a year.
Absolutely.
Which is the second thing, ROI perspective, is that, the location risk completely goes out, because the biggest problem with F&B is you go and invest in a location, the location doesn't work, you lose, 50, 60% of your capex is lost. Can't remove anything. In this case, if the location doesn't work, you unbox you box it up, you put it behind a container and just move to the next.
All right. Like you said, you've got 150 plus stores across the country, and you claim this network makes Burger Singh the third largest burger chain in India, behind only 2 global giants in the space. Talk to us about your pan-India expansion strategy. Also, are you on track to close the financial year with $18 million in QSR sales?
Yeah, so let me address the $18 million first. I think we'd probably exceed that number with what is happening with the kiosk model rollout at Delhi metros. We're slightly ahead of expectation over there, but you don't know how the rest of the quarter goes. But we definitely in line to exceed that number. Our expansion, well, our expansion is kind of built on the supply chain. So we've got a few warehouses. We've got one in North India in Kundli. We've got one in Mehsana. We opened one in Cal not too long ago, and now we are going into the south of the country
Yes.
with the warehouse outside Bangalore, which will pretty much take care of Hyderabad, Bangalore, and Chennai. And those are the 3, 4 largest cities that we want to penetrate in the next 18, 24
Okay,
months.
and what about global expansion? What are the plans there, and what is the global playbook, if you could quickly tell us?
If we play our cards right, we could probably see doing 3,000 stores in India itself with the new chaos model. And we'd like to stay focused on the Indian market, even though we've gone to London.
Yes.
But we'd like to stay away from an international expansion, because India is still a very, very large market. And with this leaner model, I think we can go a lot deeper compared to what anybody else has done.
All right. Unfortunately, Kabir, we've run out of time, but wish you the very best for your expansion plans. And once again, many thanks for joining us on Startup.